So now let's come to the topic of discussion today, why gold is the secret shield of every nation's economy. So the extent of which central banks across the world are accumulating gold is unprecedented. I mean, this has not happened in the last at least 5 decades. And you cannot just ignore or brush off this basic idea that, you know, central bankers who actually create money, who have the power to run their printing presses as they like, are accumulating this asset on the side to uh, diversify and to hedge against everything else. So this, the creator of paper money is doing that, not anybody else. So the confidence that you should have in terms of having this allocation should be at a very, very high level, which I find that most investors brush off gold because there has been a 5 decades of misinformation that has been fed to the folks that gold doesn't earn anything, gold doesn't is not a productive asset, it is only for those who don't have anything else to invest in. I think gold, with its 11.7% CAGR in the last 5 decades, has been the biggest, I would say, investment vehicle which even the poorest of Indians has used and done well with. So while we can all, talk about multi-baggers in these stock markets, but most equity investors have not got the returns what a simple investment in gold would have given them. Although the idea of gold is not to give you market beating returns, but to protect you from the shocks that the market may give you, and it will give you those shocks from time to time. There's no doubt about that. So what is the overall gold reserve data showing? United States of America has 8,000 tons of gold, uh, a lot of reserves also. But this is on ground gold is 8,000 tons, and they have not touched it since the last 5 decades. There is no proof that it still exists today. There is a place called Fort Knox, which is heavily guarded, and this gold is supposed to be there, but they have not audited it for the last, I think, 5, 6 decades. So there is conspiracy theories whether they still have it or not, but that we'll only come to know once they do that. Germany is sitting on 3,000 tons, Italy is at 2,500, France at 2,500, Russia is going up fast at 2.3. China is there at 2.2. The people say that China has a lot more reserves than it shows. Japan has 840 tons, and India now has 841 tons. India was at around 560 tons just a few years back. So India has been steadily stacking it up. Turkey has been going up dramatically. Poland has been picking up dramatically. Portugal has been buying. Uzbekistan, Kazakhstan has been buying. You also have countries like Singapore and Belgium that have been buying. These are first world countries. Even they have been buying. So the whole thesis being that this is the anchor of the monetary system, and it was the main. It was the money when the gold standard was there, but even now the banking system looks at it as the anchor of all asset classes. It acts as a stable and reliable store of value, and that is being shown that every time there is a financial uncertainty, you will find that gold will act as a reliable store of value. What is a reliable store of value? That even if there is volatility in the economic activity, this asset should hold its value at a certain point. Gold has supported currencies under the gold standard with a tangible asset earlier, but after 1971, after I think August 15th, 1971, uh, when the gold backing of the dollar was taken away, gold went from $35 to about $800 because it was held at a constant price for the last many decades. Now, the whole, abandoning of the gold standard in the 70s, it allowed central bankers to, print as much money as they like. Earlier, they were bound that if US has 8,000 tons, then they could only have so much currency, and gold's annual production is less than 2% per year. So, if all the money was tied to a gold backing, the money would only grow by 2%. The money supply would only grow by 2% a year, but because it was let loose, and hence there was unbridled money printing all across, which did not impact us as much for the first 30 odd years. But then from 2008 onwards, the impact of this amazing and unrelenting sort of money printing, it is showing impact on so many things. not just in terms of inequality of wealth, but also the kind of gamification of money that has happened. So this is the Exter's pyramid. I don't know how many of you may have heard about this before, but this was a economist, I think Ford Exter. I'm not remembering the first name, but he created this pyramid to showcase how the money moves in different times. So when times are good, money will liquidity. So this is actually showing you the liquidity and the risk based asset. So gold being the highest liquidity, very liquid and least risky asset. Gold is also called the only asset in the world which does not have a counterparty risk. Everything else is a counterparty risk. If you have money in the bank owes you that money, so there is a counterparty risk. If you have stocks or real estate, somebody is controlling who the owner of this asset is. You may be sitting on the asset in the real estate, but the municipality is where who's controlling, who has the ownership of this asset. So there is always a counter party risk that is there. If your money is sitting in a bank locker, uh, or even if your precious metals are sitting in a bank locker, there is a counterparty risk there. So the only sort of physical asset that does not have counterparty risk is gold. And as markets do well, people tend to go up this inverted pyramid. So going from least risky and most liquid towards high risk and lesser liquidity. So collateralized securities or derivative securities, all those are higher up in this Exter's pyramid. And this was formed, this thesis was there, I think, after World War I. uh, so this has does not have the cryptos or other asset classes in it, but they would be sitting at the highest point right now, I would believe. So as things go bad, you will find that liquidity will start to move towards at lower end. People will get out of derivatives and move down. As things are going well and everybody is not thinking about risk, the investments tend to go up. That's sort of the significance of this. So in modern economics, why gold should matter. One, of course, is that it is the biggest hedge that you can have in terms of like we are have all Indians have like INR assets. My stocks are in INR, my real estate is in INR, the money that I hold in the bank is INR based. What happens if something happens to INR? What will happen to INR? Maybe we'll get a government that is not so good. Maybe we will have some international trade balance of payment crisis like we had in 1991, or maybe some sort of war can happen. So in all these cases, INR will go for a toss. Your assets which are denominated in INR will be at the risk of the base currency. Now, the only asset that as an Indian I can hold, besides maybe having exposure to US stocks, is to have gold, which is not dependent upon INR. I mean, INR is basically a derived price, but gold is getting priced internationally. So if INR goes from 84 to 184, I mean, as a gold holder, I don't really care, right? As people in Pakistan, as people in Turkey or even Japan have found very recently that in the last few years that their currency has been has been smashed, but their holding in gold in local terms has gone up dramatically. Gold also gains value when dollar declines. So right now the dollar index is at a high point, but still gold has not dropped off. As soon as the dollar index starts to go down fast, which is likely to happen post the president comes in, I think that is the point where gold will show its inverse correlation with the US dollar. And gold was also used to, or is can be used to settle trade imbalances as collateral. And I think the world can move towards that situation where gold plays a bigger and bigger role in the monetary system. And that is why all these central banks are accumulating gold in a very, very big way. Uh, the protection of gold versus inflation versus currency devaluation, etc., as we've already talked about that. The importance of gold is being highlighted today in the last few years as central banks shore up their gold holdings. So our investment portfolios also should have adequate gold allocations. Traditionally, people have been having 1%, 2%, 5% kind of allocation to gold, maybe 10%. But as more and more analysts and economists are seeing the value that gold holds, they are upping their estimate to 15%, 20%, and even more in some cases. So one thing is there that we must wake up and see why the large central banks, who are the creators of money, are themselves gravitating towards more and more gold. That if you can answer that query, that why are they buying gold, why are they not buying silver, why are they not buying coal, why are they not accumulating crude oil, then that would be an answer that okay, don't buy gold. But the fact is that money creators are buying gold like nobody's business, and that should give you enough cue as to what should be your gold allocation strategy. Let me know in the comments what is your strategy, and thank you so much for watching, and I'll do more videos on this soon. Do like and share these videos with your friends and family, and do subscribe to the channel. Thanks. Bye.